Hello, everyone. A very warm welcome to you all, and thanks so much for choosing to watch this.
Yes, thank you for joining us.
We're going to unpack TF Bank's Q4 2025 earnings call today, and there is a lot to get through, a major transition story.
Oh, it really is. I mean, the headline here isn't just about the numbers, it's a whole identity shift.
You're talking about the rebrand.
Exactly. They are strategically rebranding the entire group to Avarta Bank AB.
That's a big deal.
It is. It really signals their evolution, from being a niche player in the Nordics to becoming this full-blown European credit and payment platform.
And looking at the financials, that strategy seems to be paying off.
Mm-hmm.
They reported a Q4 operating profit of 242 million SEK. That's a 29% increase year on year. Massive.
And don't forget the dividend. They're proposing 5 SEK per share.
So the growth engine, where's this all coming from?
Well, it is undeniably the credit card segment. That grew 48%. It's really the star of the show.
And geographically, it feels like the center of gravity has shifted south.
It really has. Germany now makes up over 40% of their total loan book.
Wow. Okay, so Germany is key. And operationally, revenues are growing faster than costs, which is always what you want to see.
Right. The CI ratio is improving. We did see credit loss ratios tick up a little bit, though.
Which makes sense, right?
Yeah, that's to be expected when your mix shifts so heavily toward credit cards. Also worth noting, their e-commerce segment saw a 37% jump in transaction volume.
Okay, that's significant. So let's get into the Q&A, because this is where the analysts really, drilled down into the mechanics of all this growth.
They certainly did.
Patrick Bratsilis from ABG kicked things off. He asked about credit card margin dynamics.
The front book versus back book question.
Exactly.
Yeah, and this is a crucial concept. The front book is all your new customers where you have to pay acquisition costs up front. That hurts the P&L at first.
And the back book is mature customers.
Right, the ones who are actually generating the profit. So management's point was that, margins look a bit compressed now because of the rapid growth, but they'll expand as those new customers mature.
Makes sense. Patrick also asked about the turnaround time for that e-commerce segment we mentioned.
Good question. The CFO clarified that, building up those interest-bearing balances from new transactions, it just takes a bit of patience.
How long?
Typically a lag of about 3 to 4 quarters before you really see the full benefit hit the books.
Okay. Next up, we had Emil Johnson from DNB Carnegie. He wanted to know about the competition for credit cards in Germany.
Is it getting crowded?
Yeah, basically.
And the CEO was pretty reassuring there. He described the competition as very stable and healthy. No signs of anyone doing anything irrational in that market.
Emil also pushed for a bit more clarity on those e-commerce revenue lags.
Right, and management just confirmed what they'd said earlier.
Yeah.
The large trades they onboarded back in Q2 of 2025 will start taking full effect over the next few quarters, so it reinforces that timeline.
Got it. Then we had Bjorn Olsen from SEB, and he asked a tough question.
Mm-hmm.
He asked if the Nordic consumer lending segment is effectively in runoff mode.
And the CEO firmly denied that. He explained that they just allocate capital where the returns are highest, which right now is Europe and cards. But he was clear the Nordic book is still growing healthily.
So it's about prioritization, not abandonment.
Exactly.
Bjorn also asked about the new tech platform investments.
Yeah, on that, management sees it as a continuous sort of 5 to 10-year investment. It's all about ensuring they have the scalability and flexibility between payments and cards for the future.
And what about deposit funding pressure in Germany?
Described as stable, the pricing just follows the ECB rates, so no unusual competitive pressure there.
And his final question. He asked if the economic pressure on German households puts their growth targets at risk.
A very relevant question, but the CEO held firm on the target.
He did.
Yeah, he pointed to stable labor markets and the fact that the German economy has future investment needs. He thinks that's going to drive activity, kind of regardless of the current sentiment.
So if we were to wrap this all up, the main themes are pretty clear.
I think so. First, the strategic rebrand to Avarta. That's huge.
Second, Germany and credit cards are the primary growth engines, no question.
And third, there's a real focus on long-term scalability through all these tech investments.
It's a company that is aggressively pivoting to where the growth is, but it seems like they're doing it with a good amount of discipline.
Well said.
Well, thank you so much for watching. If you found this breakdown helpful at all, please do click like, share the video, and of course, subscribe to the channel.
And stay tuned for more content coming up.
We'll see you next time.